Good afternoon and welcome to the end of day review for today. And today is Tuesday, March 26, 2024. We have a little bit, low impact news today. Consumer confidence at 10, and other, news right there. Durable good order. And by the way, we are in week 13, which is the last week of this quarter and last week of this month also. And also this week we have option expiration for this month and also for the whole quarter, first quarter from January to March. Fed meeting just happened last week, and the next meeting in April. EBI, it happened 2 weeks ago. The next one will be April 10th. Alright, I want to take a look real quick at this setup. Yeah, we have open gap. So this is a bullish scenario, right? In the bearish scenario, or if we flip this chart, you have flip this chart, so we have a opening gap up, and then we have a U swing at 9:30. Take out the buy side liquidity. Then you look at this. So this one is the but if we have a bearish scenario, then you have a gap up right here, right? So basically a gap up right there. And then it's gonna be it take out the liquidity from the high. So this is the high, and then it will come down and review the make certain move, right? And then it come down and fill the gap. So that is the bearish scenario. So the model 212 right there. So we can apply this model for today perfectly. But the tragedy that we don't recognize that until almost at the end of the trading day. We don't recognize that. We're so caught up with this. We don't see the charts. We caught up with the chart. We caught up with the chart. We don't see anything at all. But if we use the chart that just use regular trading only, you can see the heel gap up, and then you see the swing right here at 9:30 all the way until 10:15. Take the high of the prior day right there and fill into the gap right there, and then boom. It's the first time it tells it can't come down, but right here it tries to trap more sell side, and you see a very sudden move around 11:50, and exactly at 12. It's so off. Yeah. Yeah, if this gap, and ICC say right here, very careful, very detailed. One way we're going to avoid IM section right there. If the Barat, he specifically say that we need to avoid IM, and We did trade in IM. We trade a bunch of them. That's our mistake. But they say we should avoid. And if the price do not return to IM section due to the new or anticipated anti-PM, and exactly the PM coming is fill the gap. That's our huge mistake right there. You see the gap. Yeah, let me mark the gap. So here's the gap. Yeah, see that? Let's go back to the other chart and you can see this is the gap. And right here, all right, you see sometimes we trade this chart, we lost the perspective. So if we trade a regular hour, it gives us some idea right there, which is give us the idea that it is a Judah swing 930, check out, stay above the Friday high, right, which is this one, stay below the Friday low, which is the opposite. If we flip this chart for the bearish, it exactly, see that is it rate the sell side liquidity, basically check out the low of prior day, which is in this case it check out the high of prior day right there, and the Judah swing right here. And look at the look at the model right here. It gives us a very accurate description right here. It creates a double bottom right here, right, and then it reverses, which is exactly for today. It creates a double bottom, double top right here. 1, 2, 3, actually 3 right there. Right there, you see that? Double top right there. And then it starts show up. If we make the trade right here, wait for this one at around exactly around the last hour right here. Set up, you have a gap right here and just retest that gap. So we can describe this at a order block right there, or it's a bullish breaker for that matter. Right here you can treat this as order block. If we treat this at a fair value at a breakout level, then any candle close above it consider as a order block. And when we see order block fair gap, then the retest right here, man, so beautiful. So that's an idea right there. Yeah, we so caught up with every move and we missed the major move, a major move right there, and that is the thing we need to working on right now. So we take a bunch of trade, we take about 14 trade, and too much to go into detail, but let's see what we miss. Yeah, let's chart it a little bit crowded, but yeah, I think we need to step back a little bit. We caught up with every move. We should step back and let's see what the market shows the major move I'm gonna make instead of trade every candle up and down, up and down. it's not good for it at all. Yeah, so this is the gap for today right there. Yes, how do we mix this one? Yeah, in the real time we see his up huge, move huge. We talk on a reverse, but precisely it is a setup for short. For the novice for us, we mistaken and thought it's to go long, but actually it's set up to go short. Because precisely is break out this level. See that? And if you go into this feather gap right here, we have a huge feather gap right there. Okay, let's delete some of this. So we see this is a bullish breaker right there. Okay. Yeah, so we have the bearish breaker. So break that with another bearish breaker. See that? And we have another bearish breaker here. And when it break that level, it's huge. It moves very huge right here. Let's remove some of this line here. Yeah, we see the huge gap right here, and remember in the this is the order block, you can see that feather gap, and this just a retest and right into that that gap, and you have a gap right here overlap with that gap. So basically we have two huge gap, and we have a gap down and then a gap up. That's where the turtle sub coming. Gap out, gap down, and gap up. I think we did check a yeah, synchronous out right here. So basically the turtle sub is happening right here. When we have a gap down and then a gap up, overlap, feather gap down, feather gap, where the turtle sub fall breakout gonna happen. And in this case, it tells us that the order flow is bearish because this bearish breaker huge, and you see that it not breaking this bearish breaker 50% of that breaker gives us. So you see it tests but it never, so that means it's a bearish order flow right there. So 50% of that candle is around this level 40 right there, and it never break to 40, so we should short them right away. So let's document this. So we have a gap up, gap down. So the setup right here is so easy, happen every time, and this whole thing can be a auto block right there. But let's see, whole thing auto block, photograph. Yeah, at that level. Or we can put right here, use the high time frame level or At this level, you have, this is the auto block breakout, this level on the bullish breaker breakout, but it's a fault breakout right there. But in this case, we don't want to, the high of this candle can be a level of interest right here. Location high is 38.40, very close, so we can use the high time frame at a entry right there. So put right here, and the time is alignment. So basically right here we have what is a full breakout. In this case is a order block, further gap, retest, and also it have another phenomenon is further gap. Yeah, we kind of confused, right? We see the further gap up, further down up. We thought that gonna be balanced price range, so it's just retest and it's gonna go up, but it's not. In this case, it break down. Yeah, let's see if we have yeah, here's the, so that's one is balance price range, right? Down, up, and then retest, go up, but in this case it break down, so you can call this balance price range, down and up, and retest. We thought they're gonna be retest, but precisely it going down, so that's a little bit confused for us right there. So we thought they're gonna be a balance price range right here, or it gives us its inversion value gap right here. So we thought that the down close is just a retest, it's gonna go, but in this case it's break down. So if so it depends on the order flow. If the auto bearish, then we need to go in and short them when it break down. See the gap right there, and gap up, so we mistaken, but we should use this level right here, 26. But anyway, let's mark this to see. Oh man, it's huge. If we put right here, entry level right here, then we put our stop loss at this level. Yeah. On way. Okay. That's the huge widget M for high time frame. I think this level should be good enough for us right there. Yep. Wow, 1 to 10 right there. 1 to 10 risk reward ratio. So basically that move is right here. Yep, so photograph up the air, but in this case it break down. It's not and photograph down. That where the fall breakout or the total sub happen. right? The total stop right there is 4 breakout. So in this case, we give the priority to this bearish breaker right there. So it's a bearish order flow, so we should short them instead go long. Yeah, we need to put a note right here. If order flow go short or vice versa. Yeah, in this, it not always, you know, long. It depends on order flow. So we put a sell stop. At 521. 40 is the high time frame level. High time frame 1 hour level right there. And we target also on the high time frame level. And the risk reward ratio is 18 cents. And we got $1.83. Can you believe that? Man, 1 to 10 risk reward ratio. I don't know what the heck we're doing, but we missed this trade. We still in the forest jungle. We haven't found our way yet. But anyway, we'll get there. Keep practice every day. Show up every day. So it should be a balanced price range, and then it come down. So it go down and it's balanced this, and it's going down. You know, imbalance and rebalance right there. So it's a imbalance, and yeah, basically you have imbalance, and it's the rebalance right there, and then it's come down. Imbalance, right? Imbalance, then the rebalance. We have a rebalance, imbalance, and rebalance. When we have that, and we can trade based on the order flow. So order flow bearish and short, and vice versa. It's basically right here. Up, see the gap, and level right there, 521.26. That's the level. Man, you don't need to trade every time. Just one this trade, huge trade, you can catch them up. All right, that's our mission right there. That's our goal. We need to wait for the setup. Wait for a time alignment. We need to stop trade, 2-minute trade, and just chase. Let control ourselves instead of let the FOMO is run us crazy. It make us to chase every trade, and we miss the big picture. We miss a big trade. We need to catch a long trade. I mean a big major move. Yeah, that's the challenge, the work that we need to put more effort into it. Otherwise, we sabotage ourselves if we don't make improvement. Try to make improvement every day, not big improvement, just small improvement. Okay, we start tomorrow. We reduce number of trade we take. We just slow down. We so hot right now. We just check every trade. So we have to cool ourselves down, and so beautiful right here. ICT model. What's model? I think 2.1. Gap down. No, this is gap up. And go short in PM section, and the time is exactly 12, exactly the noon time right there. Right. Oh, we make the model is 2.2, not 2.1. Wow. So basically we have a Judah swing before 9:30 and the Judah swing at 9:30 with the gap. Yeah, 9:30 with a gap, which is exactly today. By the way, let me fix that. Should be 2.2. Okay, we don't see. Yeah, here we can see much better. Okay. Yeah, we can see much better right here. Yeah, ICT right there. Yeah, just the same, but we want to work a little bit different right here. It's a ICT model 2.2, which is a gap up. Gap up, and basically he told us, look at the 10:30 and gap not fill. Yeah, left and fill in AM. Then we go short in PM. Yeah, look for rebalance right there. You see, gap down and then rebalance. And the gap down at 10:30. By 10:30, it is fail to go down to fill the gap. Then we need to shorten the BM, especially we need to look for the rebalance. Look for rebalance for entry. Well, we have rebalance right there. Yeah, beautiful setup. Cannot better than that. So basically you have a gap up and it create UDA swing. Oh, the UDA swing at 9:30 right there, you see. And then look for right here the balance and the rebalance right here. Yeah. Imbalance plus rebalance. Yeah, so this one is, we have to keep a little bit right here also. Plus UDA swing at 9:30. Yep. So let's document this. Yeah, I see the gap up. UDA swing at 9:30. Alright, that's it. We got to go. Thank you for your time and interest. We're always grateful for this opportunity. We do what we love, then success is coming our way. Bye for now. Have a great evening.